welcome everybody to today's webinar from A&D Mortgage. Today we're going to be covering our non-QM products. So it's non-QM 101, an overview of our loan solutions. Today's presenter is going to be Carla Biancaniello. I'll introduce her a little bit in just a second. We'll run through the ground rules of our regular weekly webinar. So again, we've got a small group who have pre-registered, and then the rest we are broadcasting live on Facebook. So for those people who are in the Zoom platform, we've turned off the microphones and cameras so that we can get a clean recording, as well as a clean recording over on Facebook. So type your questions in the chat of the Q&A feature. For folks joining us on Facebook, there's a live chat that you can go ahead and put the questions over there as well. So again, her name's Carla Biancaniello. I will get that right someday, Carla. I swear to God. And you figure I can get your first name because that's easy. It's just like mine. So Carla is one of our top producers here at the company. She has been with us for a while. Consistently a top performer, knows non-QM in and out. Not only will she teach you everything, she's taught me a pretty big chunk as well. So I will introduce the queen of fancy financing, Ms. Carla Biancaniello.
How you doing, everybody? Thank you very much for listening today and joining our webinar. And hopefully I will be in your offices meeting with you soon if it's some of my accounts that are online. If not, new people, I'm hoping to help all the other account execs throughout the country. So just to give you a little background on A&D Mortgage, we are a full service direct lender, as you can see up there on your screens. We've been in business over 18 years, so you've got very experienced, qualified non-QM lender that it is our specialty and our focus. Also, Imperial Fund is another backing of us, and we also offer hard money loans through that program, through that company as well. Here's our footprint throughout the country. We are licensed in multiple states, just also still receiving licenses in each state, additional states today as well. This morning we just got licensed in another state, and we have here, you will see our footprint. The red is for states that we're licensed in for mortgage lending, and the pink we are licensed in, but also there are states that do allow, if our partners are not licensed in that state, they can submit business purpose only loans to us, which allows you to do business with us in states where you're not licensed. As long as you have a corporation or an LLC, you could sign up with us and do investment properties in those states. What makes us different? Well, you're account executive, of course. That's what makes you different, makes us different. And we have a very good streamlined process, an onboarding process, which is simple. Our technology is advanced when you're submitting loans. Importing and uploading into our system goes through underwriting fast and smooth as well. And our niche products, which I like to call fancy financing, so you keep it fresh in your head and differentiating us as well above everybody else. I'll get into those products next. Non-QM, just to be sure everybody's aware of what that is, it's non-qualified mortgage. It is taking a big piece of the mortgage industry today, and a lot of focus is going in this direction simply because the rates are up. So the market is shifting, adjusting, and changing. Who benefits from these type of programs are typically self-employed borrowers, loans that do not fit your cookie cutter, agency, Fannie, Freddie, mortgages where you have to qualify based on a DU or LP approval according to Fannie and Freddie guidelines. So any fallout from there is very advantageous for them to take this alternative lending program. Foreign nationals, for the borrowers who live overseas part-time, we can help those. And for investors looking to get into building their portfolios of investment properties as well, this is what the non-QM programs are designed for also. All of the products that A&D offers as well is not just non-QM. We do prime jumbo, which is a very cookie cutter program, standard out there in the industry, where we are bound to the AUS. We do have government financing as well, and conventional mortgages, which is the typical Fannie Freddie I mentioned briefly. So without further ado, here are our non-QM programs. And I will go through them pretty much program by program, just to tell you what is allowed for each one, because we have a super prime and we have a prime. Although all the income documents are the same and available for both of these programs, the difference between the two is super prime is better credit, where you have a minimum credit score of 599, and prime is a program which can go as low as a 580 credit score and or not even needing a credit score, but they can do the same income documents for each one. Super prime also allows for a credit event to be 2 years out, which is a feature that Fannie and Freddie requires 4 or 7 years out of foreclosures or bankruptcies. This is one reason why you would take a non-conventional borrower or a conventional borrower into our programs here, because they wouldn't fit the conventional guidelines. Prime allows that credit event to be only 1 year old. So that's a niche of that as well. And it does also allow for lighter trade lines. So I'm jumping back and forth a little because the programs do mirror each other, other than just being a little bit rougher credit is allowed or light credit is allowed in the prime opposed to the super prime. So jumping down, you'll see loan amounts, just to go bullet by bullet, are up to 3 million for super prime. We do make exceptions as well, but lower LTVs, excellent credit scores and compensating factors are required. They do allow for cash out in this program, also up to 75%. You can take a 30-year or a 40-year fixed. One of our niches is the 40-year fixed rate. We do have 2 adjustables, 5-year and a 5-1 arm and a 7-1 arm as well. And DTIs in this program can go up to 55 as well. Another feature that's a fallout from agency or Fannie Mae guidelines also. We can accept 1 or 2 year full doc, regular standard documents. If you're salaried, pay stubs and W-2s are sufficient for 1 year. That'll help with many loans these days, where if they didn't have strong enough income the previous year, but it's strong this year, they're on an upscale instead of averaging it, just using 1 year of it will help them qualify. 12 or 24 months bank statements, same concept. If they're self-employed, they can do 12 months of business bank statements or 24 months bank statements to calculate their business receivables and deposits to help formulate a debt ratio. Whereas opposed to full doc, if you're giving us pay stubs and W-2s, if you're salaried or if you're self-employed and you're providing the tax returns for 1 or 2 years, the bottom line numbers might be less for the self-employed borrower, where on the business bank statements, they will show more of the actual income that's being earned through the business. That's why we are able to do those programs with the alternative documents. So not to confuse it, you're either providing tax returns or you're not. If you're not, you're going into the alternative documents, which I'm going to explain right now. Nope, go back one, Carl. If you could, thanks, sorry. The next bullet there is a 1 or 2 year CPA letter. That is CPA prepared P&L, I'm sorry, not a CPA letter. That is where they take either 1 or 2 years from today back from your CPA, tax enrolled agent, or a licensed tax preparer. The bottom line number on that document is what we use to qualify. So that's one of our niche programs there as well in the super prime program, where you're giving alternative documentation opposed to giving your tax returns or bank statements. This is one step further. If you have just a P&L, we do accept that. Asset utilization, that is the next uniqueness in a program that's available, where we take all of the borrower's liquid assets and do a calculation of them to qualify them for their income. They take a percentage of savings, checking, stocks, bonds, securities, divided by 60, and that is the number that we will use to qualify. VOE program is another one that's allowed. And again, both, just to remind everybody, can be done in our prime and our super prime. It is designed for a borrower that is possibly working for a smaller mom pop corporation and they don't produce ADB checks, or they receive tips or any form of cash income sometimes. But if it's all explained on a VOE, we're good to go with just the VOE. On the 1099 program, simple as it is, that's all we need. Again, just the 1099. And we will use that number on the 1099. We take 75% of it and we use that to qualify. All programs require 3 months reserves of the property we're lending on, not just, not all the other properties that they owned. The 3 months reserve only tied into the property that we're lending on. Gift funds are allowed for reserves as well. And there's your note with 24 months of a credit event. Condos, we can lend up to 85 LTV, and condotels are also allowed. New York, they put a notation there, we can go up to 85% as well. We do know that some competition limits the LTVs in certain states, so that's why it's spelled out here. Also going to the prime, same thing, 30-year fixed, cash out is allowed. It's again, just lower LTVs and higher rates because it allows for a little bit more less than the perfect credit super prime allows. So next is, Carl, you can move that screen. Thank you. Next is our DSCR. This is a very popular product out there where the program is based on an investment property's rent roll. So whatever the appraiser states to be the market rents on the appraisal is the number that we're using to qualify. That's it. Nothing else is needed. There is no debt ratio calculated. There is no income needed to be put on the 1003. And there's nothing, the debts and liabilities, everything is filled out normally. But again, no debt ratio is calculated. It's based just off the rent roll versus the pity of the property. So for example, if your pity on the property is $100, we just require that the appraiser states on the market rents, the 1007 rent schedule, that the rent typical for the area is $100 or more, and you have a completed loan qualified and approved. If for any reason the appraiser does come back and state that the market rents happen to be lower than the pity on the property, we will still lend on that. It'll just be reduced LTVs, and there's a hit to the rate for it as well. Same thing, 30-year, 40-year fixed rates, we do allow cash out as well. Next is the foreign national program. This is for, as mentioned before, foreign national. Number one is that you have to prove you have residency abroad, and we will lend here on the investment property that they're looking to purchase or they're refining or cashing out of. There are two types of foreign nationals that can be done. It's a full doc foreign national, or it is a DSCR foreign national. DSCR, debt service coverage, same thing, rent just to cover the pity, or foreign national needing full doc. If he does have overseas income, we could take a CPA letter and a bank reference letter with income on it year to date, and we use that to qualify. Bridge loans, that is part of our hard money program. This is for investment properties only. It is for multi-use. You could do condotels. You can go up to 20 units. It could be a warehouse where anything unique always is done and looked at case by case, so you could submit that in advance. And since I mentioned mixed use, I just wanted to jump back in reverse because it juggled a little thought in my head. On the super prime program and DSCR, we can also do mixed use properties. Next screen. Full doc prime jumbo, pretty standard. Just a recap of everything I said and stated that's allowed in each of the products. Here it is going to be spelled out for you in more details. Full doc prime jumbo, we are bound to an AUS. Your AUS or DU will come up with an approved ineligible due to loan size, but we are allowed to do 1 or 2 years of income. Whatever the DU says is what we will do. Pretty standard cookie cutter type loan. Rates are aggressive and competitive, so look at those for that. Full doc non-QM. This is I would say the super prime program or the prime program where you're doing full income. If you're self-employed, you're providing either 2 years tax returns or you're doing pay stubs and W-2s for 1 or 2 years. Why would you take a customer that can go full doc in the non-QM programs, which are typically known for alternative documentation and type of self-employed no income lending? If you're a investment property and you're looking to close in an LLC, you could get that here with a full doc loan. And or if you have that recent credit event or some mortgage history that's less than perfect, that might be having your DU fail or become ineligible, this is a reason then you could submit it to us for a full doc loan, because they're all manual underwrites. Obviously, everybody knows we don't run DU or LPs on non-QM programs. The 1 year and 2 year P&L, I'd love to touch back on that. That is one of our most aggressive and niche products today. Again, it is just as it states. No other documentation is needed other than the P&L on letterhead from a CPA, licensed tax preparer, or enrolled tax agent. Bottom line number on that P&L is the number we use to qualify. So again, it's the last year or the last 2 years, and that is from today back. We are not looking for either all of 2020 and 2021 and then additional 6 months of 2022. We want it from 1 or 2 years from basically today back. So we're in July, I would say from June 2022 back, 1 or 2 years is what we use to qualify. Again, very simple. The bottom line number on that P&L with all his expenses versus income come back at $5,000 a year, that's his income. If it comes back at $1 million a year, that's his income. That's simple. And we will verify the CPA, just needs to have his license number on there, and you're good to go. 12 and 24 months bank statements, pretty standard industry-wide. Business bank statements, we use 50% of deposits. Personal bank statements, we use 100% of deposits. And also you can submit your bank statements to our concierge service online before you submit the loan to have a calculation done for you, because then you can submit that calculation and the Excel spreadsheet that you receive back when you're submitting your loan in. Standard qualifying, again, is business bank statements is 50% of deposits. We do have the feature and option where they can supply a CPA expense letter if you need more than 50% of the deposits to work your debt ratio on the file. Please keep in mind in this program, look at your statements before just submitting a loan or sending. If there's NSFs or a lot of overdrafts, it's going to pose an issue. So that might not be a loan that you're submitting to us for a bank statement product. Large deposits and transfers are also going to be viewed and backed out. So please look at them. Don't just submit them in, because we like to be proactive when you're submitting your deals. If you feel that the bank statements are not cookie cutter, they have issues, they have some months of inconsistent large deposits, or they have these NSFs or overdrafts, as some have said is their normal course of business, that may be, but that is not acceptable to us. We will allow 3 in like a 12-month period for your NSFs or overdrafts, but more than that, exception will be needed. They will hit the rate, just makes the underwriting of it much more strict and tough. So please be wary of that and look at it in advance. Again, if you're submitting it to the concierge service, they might not see those details. They're just going to calculate numbers for you. They may back out a large deposit, but it will be re-underwritten by the underwriter once it comes in. So the alternative to that, if it's not working, is to do a P&L program. Back to the DSCR is kind of a repeat, but just to run with it, it's 1 to 4 families, condos and condotels are allowed. The asset utilization, as I mentioned, here's your breakdown of each of the liquid assets that we are allowed to use to calculate this loan. The typical type of borrower here that's doing asset utilization is somebody that may be retired, or somebody that is heavy in their liquid assets, but they don't have a strong stream of consistent or income coming in now. So we will take the calculation that's listed here of each statement, divided by 60, and that comes up with your monthly income. Again, available in the super prime and prime programs. 80% is the max LTV in that product. The full doc foreign national we could do, whereas normally in the easiest path of least resistance is to do a DSCR foreign national. But if you're doing a full doc foreign national, we'll take a CPA letter with a 2 year for the last 2 years with the year-to-date income on it, 1 bank reference letter, and obviously if you're doing a purchase, your down payment and closing costs standard, but income docs, that is it. Just a CPA letter, and you could be considered a full doc foreign national. All of these programs and all the availability I've already mentioned is available on our quick pricer. So you're able to go in there and put in your scenario, and then you could change your income type and it'll give you the different pricing, just to keep that in mind, or reach out to your account executive to help you structure it before submitting. Last but not least is our VOE program /1099. Again, as I mentioned, a VOE is coming from somebody who might not be with a large firm, or they work for a small mom pop organization, or majority of the income might not be paid directly, or it might be some sort of tips or cash. We'll take the numbers on the VOE for the last 2 years and use that to qualify, and we will call and verify it. Your 1099, same thing, must be with the same company the last 2 years. And we take the number on the face value of the 1099, 75% of it, and that will be used to qualify. Again, 1099s, typically your maybe examples are realtors or stockbrokers, people that have income. They are looked at and viewed as a self-employed borrower, but they don't own the company. For example, the stockbroker might not own Morgan Stanley, or the realtor may not own Keller Williams. So we will take the numbers on those 1099. We use 75% of it as a haircut to factor in for the expenses and all. That's it. Next slide on there. That should be it. That's why I call it fancy financing, everybody, because I think it is fancy. So if you don't, I'm sure you think you did now.
Thanks, Carla. We've gotten a couple of questions come in during the course, so we can run through those really quickly.
Sure.
All right. Do we have any stated income programs?
No, there's no purely stated. What the closest you're going to get to it is your DSCR, where there's no debt ratio and there's no income calculated, but it is only for investment properties. For a pure stated note, you have to see if they're self-employed or they can fit into any of the income document programs I had just gone over.
Okay. And then the next two are follow-ups on the bridge loan program, which is what's our current processing turn times on a bridge loan?
A bridge loan can go in 20 days or less. You have to submit the file. We order the appraisal. Just to play it safe, we've gotten an upheaval of business. It's been a little busy, so I would say 30 days or less. And again, we order the appraisal and it goes rather quick because there's no income. So.
And what's the current floor rate on those loans?
They're running anywhere between 11 to 13%, depending on the credit.
Okay. That's good. All right. Yeah, so we'll open it up now for Q&A. We'll give it a few minutes for people to put their questions in. In the meantime, I'll do some of the wrap up stuff and then we'll get back to the questions. So as Carla had mentioned, you can run a lot of things through our website. First off was the quick pricer, which she mentioned. So you can run all of your non-QM scenarios, anything that you can possibly think of. You can go to quick pricer and you'll get your rate, get your monthly payment, and at least set some expectations with the borrowers. We have A&D Appraisal Center, which is a centralized appraisal management platform. We have somewhere, I believe, Carla, now over 20 approved AMCs, something like that.
Close to
So
20 AMCs throughout the country.
yeah, so if you want to go crazy and order 20 appraisals from 20 different people, you can do it all in one place and not have to go out and log into 20 different places and manage them individually. A&D Studio, which we actually did a webinar on last week, that's online if you guys would like to see that, is our web-based marketing platform that you can log into, and functions like Canvas. You can customize
flyers for open houses, any marketing material for our brokers in their name.
And you can either email it out or download it like Carla does and take it to a printer. So it's handy for anything that you might need to know about what we offer. And then every Wednesday we do these regular webinars. So the next few topics that we're going to be covering, again, we'll be looking at a deep dive on the appraisal center next week. The week after, we're going to talk about rural and manufactured properties. The week after, the best way to prep your files so that we can get to the closing table faster. And then we'll be doing another deeper dive on foreign nationals, permanent and non-permanent residents. So we try to announce at least the next 4 weeks out. And then we always get the question about whether these videos are recorded. Yes, they are. So we record them separately and post them on our website, A&D Learning Center, for people who are joining us on Facebook, or will get notified later that we broadcast on Facebook. There's a recording that resides on that post as well. So the information will be out there. And for people who register through Zoom, you'll also get a link.
You froze.
5-question survey that you can take. All right. And then we are on social media. Like we've indicated, we're broadcasting live on Facebook. We'll be expanding in a couple weeks and broadcasting all these other channels. So we're on Facebook, LinkedIn, YouTube, a platform called Telegram, similar to WhatsApp, but a little more secure. You can download the app from either Google Play or the App Store, and then just type in that address and you'll subscribe to our links. And then we're live on two groups called Non-QM Exchange. One's on Facebook, one's on LinkedIn. So that's a network of all brokers. So you can interact with other brokers. You can run scenarios by us or them. We all pretty much stay engaged there, and it's a very active community. So you can find out what's going on. If you're not already checking out trade publications or anything else, it's a good little kind of grapevine. And that's everything I've got. So there's a couple more questions. The minimum credit score on the bridge loans is?
It's 580, but
580.
again, case by case.
Okay. And
it does have its own matrix. If you're a broker asking a question, you'll see it in the daily rates that we email out. It has its own matrix. So,
okay. Do we do first-time home buyers on DSCR?
typically, no, it's case by case. We can make exceptions, which again, they will hit the rate. And I have many of those exceptions that they have been granted, but just keep in one thought. If they've owned any property in the past 24 months, even if they sold it, it automatically satisfies the condition and they would qualify. So if they owned a investment property and they sold it, and now they're buying another investment property, they'll be okay with that. If they live in a primary residence, now they own that residence, we're okay with that. If it's a refinance, you satisfy the condition because they own a property already. But if it's a true first-time home buyer and their first property is a DSCR, it will have to be submitted as an exception.
Okay. What's our current floor rate for DSCRs?
6 3/4.
Okay.
So
we've
it
got
might
a
be a
gentleman.
little lower LTVs and lower credit scores.
Yeah.
Higher credit scores will be a little low.
Okay. There's a gentleman wanting to get a little bit more information on the bridge loan program. So for those of you who've registered again through Zoom, you'll get Carla's contact information so she could give you more information. We also did a webinar a few weeks back on the bridge loan program. It is recorded. You can go to admortgage.com/learning-center. And it'll probably be 2 or 3 rows down. I believe we did it about 4 or 5 weeks ago. And then what's the origination point on the bridge loans?
We don't have, unless they're choosing a rate where they're buying it down with points, we typically don't have points.
Okay. And then on the full doc program, what's max LTV for a vacation home?
85.
Okay. Late payments on the previous mortgage, looking for a new primary home. How long would they need to wait?
Okay, so super prime is 0.30 and prime allows 0.60 in the last 12 months. So how many lates do they have in the last 12 months will decide which program you're going in, either super prime or prime. That's the difference. 2 years of a credit event and 0.30 on super prime, 1 year credit event allowing 0.60 on prime. That's the main thing that'll differentiate those two products.
All right. Another question. What's the underwriting fee on DSCR?
It's $14.95.
Okay.
Across the board that's our underwriting fee on all our programs.
Okay. Good question. Thank you, sir. And not sure if we're tapped out here on questions or not.
And please be sure to try the quick pricer. It is on our homepage. You don't have to log in. Just admortgage.com. You'll see quick pricer. You could do DSCR greater than 1 or less than 1, toggle it back and forth, and the rate will change. You put in your score, your LTV, number of units, and you'll also see something important there is the state. It says either all other states or there's about 5 or 6 states listed that factor in that state having an additional a hit, like New York, for example, has New York mortgage tax. So there's your quick pricer. Thanks, Carl.
Yep.
So right up top, you see it says 2-year full doc. If you open that window, there's all the income programs I just went over. You could choose your product, and then it'll change the rate scenario to the right. And all other states that I mentioned there, you can open that window. It lists the states that have a different condition or caveat to change the rate on it. If the state's not there, then you just leave it as all other states. And then, of course, the only programs that have prepayment penalties are the investment properties, and you can go anywhere from 5 years to 1 year or buy it out completely.
Okay. And I did just get the question that I alluded to earlier. So yes, this webinar itself is being recorded. It will be at this web address, admortgage.com/learning-center. Usually it takes us about 24 hours to do the edits, but it should be up by about noontime tomorrow, East Coast Standard. But again, if you are on our Facebook page, I think the video will stop processing within minutes after we close out the webinar, and it'll be there. So you can immediately go back and take notes if you need to while it's still fresh. We covered underwriting. Does the bank statement require a 1004 appraisal?
Every program requires a standard appraisal. 1007 with a rent schedule if it's investment properties. 1004 regular residential primary residence appraisal. Yes, there's no programs that don't require appraisals.
Okay. Okay. Keep the questions coming if you've still got them. If not, here's another one. Prepayment penalties on DSCR.
Yes, anywhere from 5 years to 1 year, 2 year, 3 year, 4 year, 5 year. Obviously, 5 year will give you the better rate. You can buy it out. The lesser the prepay, the higher the rate. And you can also toggle that once you put it in DSCR. Change the red there, Carl, to investment.
Oh, yeah, investment.
And then it'll give you all the investment
there we are.
prepays. There you go.
Okay. All right. So I think we reached the last question, unless somebody sneaks one in. And again, if you have questions, again, I will give you Carla's contact information. She can follow up with you. Again, that'll be tomorrow. Here's a sneak question. Oh, no, still the same one. Yeah, so she'll be able to answer any questions, or if you can't reach Carla and you have one that you want to ask immediately, you can just email marketing@admortgage.com. I'm honored at mailbox every day, so I'm in there pretty regularly. So if you have a question, even if you need a link to the recording tomorrow, I'll send you guys a link. So that will pretty much cover us for today. Again, let me put up the schedule of next week's just to remind everybody in case there's a topic they want to either pre-sign up for or at least mark on their calendar. So again, next week we'll cover the ordering appraisals through the appraisal center. The week after, we're going to cover rural and manufactured properties. And then the week after is how to prepare your files for faster closing. And then we'll do a deeper dive on the foreign nationals, non-permanent residents. And again, we'll be broadcasting live on Facebook, so be sure to like, subscribe. I can't remember whichever one you do on that platform. I'm not the most social media savvy, but be sure to follow us and participate in the non-QM exchange. So with that, Carla, thank you for, as always, another great and informative presentation.
My pleasure. Thanks for listening again.
And we will see everybody back here next week.
Thank you.
Thank you, everyone. Have a great day.
Bye.